Welcome back, and joining me for a look at the equity scene is Patrice Rassou from Ashburton Investments. Thank you so much for your time, Patrice. It's been a slew of central bank decisions this week. The latest one coming from Japan there, as they kept their interest rates unchanged after, of course, the hike that we had a while ago that spooked the markets. Just out of, all the central bank decisions that we have, what stood out for you? Maybe one or two things that stood out for you this week.
Yes, Zinati, very good question. I think the big one was the Federal Reserve, which cut 50 basis points instead of 25 basis points. They had hiked 500 basis points over the last 16 months. So it was long awaited when the big bellwether central bank in the world would start cutting rates. That follows other central banks which had started cutting rates, like the ECB and Bank of Japan. And I think it signals that monetary policy would be easing, which is good for markets, because there are concerns that the globe might plunge into recession as a result of rates being very high for an extended period. So the fact that the Fed and other central banks are cutting, we also seen this morning Bank of Japan, which had hiked in July, decided to pause. The Bank of China also pausing. That the stance is globally towards lower interest rates.
Yeah, right. Well, talking about interest rates, China also, they're keeping their 1 and 5 year loan prime rates steady, even though we've continued to see lackluster economic data coming out of there, including the data that we had last weekend. Is the much needed stimulus there still quite measured?
Yeah, very measured, as you say rightly. I think you're having a situation where you have deflation in China. The property market has imploded. Demand is weak. Consumer confidence is shattered. We're really getting to a situation which is very much like a COVID lockdown type of scenario, where everyone is extremely cautious. The consumer has been burned by the fact that the property market has been unraveling and is sitting on excess savings. So what they need to do is keep interest rates low and do some form of quantitative easing, incentivize through excess liquidity business and consumer spending in that economy.
Well, talking about consumer spending, I've noticed that the JSE retailers have been roaring today. At this point, while we talk, Truworths up 6%, TFG up more than 5%, Mr. Price, they're climbing 4%. What's the deal here?
Yeah, I think if we look at the numbers, Truworths reported results, I think very solid numbers. But I think the bigger picture is, since the elections, we've had an increase and improvement in consumer confidence in South Africa. We've had load shedding, which has been almost a story of the past. We also have a situation that recently we've seen with the two-pot system. We've had a record number of savers who've accessed their pensions. And there is a bit of a view that there'll be a trickle of that. Some majority will be towards repayment of debt, but a trickle of that will go into disposable income and might find its way to the clothing retailers.
All right. Well, let's go into banking. Investec, they're coming out with a trading update today. The bank is saying that it is trading in line with its full year guidance, but it expects its headline earnings per share either to slump by as much as 1.4% or to rise by as much as 3.5%. It doesn't seem that investors are too happy with those numbers. What's your take on them?
Yeah, the share is down a little bit in a rising market, down 2%. Obviously, the range basically -1% to 3%. Nothing exciting, but I think the reality of the situation is that credit loss ratio are above the guided range in the UK. So I think that's a concern a little bit. They also had some FCA fines in terms of motor finance. So that's, I think, is going to be the specific impact on the results. But otherwise, South Africa is doing a lot better. So I think that's a positive from the result. And the non-interest revenue is also quite positive. So So I think this is a story where we've had very specific issues in the UK.
All right. Well, as we wrap up the conversation, Patrice, do give us your stock pick for today.
Yeah, stock pick for today has been a share which has lagged a little bit at City Lodge. City Lodge not benefiting as much as its cousin or neighbor, Sun International, from the tourism boom. We've seen earnings up almost into the double digits. Occupancies are improving, but it's more the business market. And I think they had a bit of a slowdown into elections where there was less business travel. But we think going forward, occupancies will go up, it's paid down its debt, activity will return, and I think its exposure to the business market will help going forward. So City Lodge is my pick.
All right. Thank you so much for your time and for your analysis today, Patrice. Appreciate it. That was Ashburton Investments' Patrice Rassou.